Hey, value investors, welcome back to Money Journey. Today we are diving deep into Atkore, ATKR stock, an industrial powerhouse that's been a favorite among value investors. I've been tracking this one since 2022, waiting for the right moment to strike. And now, with the stock down 66% in the past year and 27% year to date, is this the opportunity we have been waiting for? We will explore their competitive advantage, dissect their current financial situation, and most importantly, perform a thorough valuation to see if this stock truly represents a long-term investment. We are here to find undervalued stocks, understand solid fundamentals, and make informed decisions. Let's get started. Atkore is a leading manufacturer and distributor of electrical, safety, and infrastructure solutions. Essentially, they provide the backbone for critical infrastructure projects. Their products range from electrical conduits and fittings to cable management system and safety equipment. Think conduits, cables, and metal framing that power and protect buildings and critical systems. Founded in 1959 and based in Illinois, they serve a huge markets like constructions, data centers, and renewable energy. One of Atkore's key competitive advantage lies in its strong market position and brand recognition within the electrical and infrastructure sectors. They are number one or two in many product categories, with brands like Allied Tube and Conduit and Unistrut giving them pricing power and customer loyalty. They have a wide distribution network and establish relationships with contractors and distributors, creating a strong barrier to entry. Furthermore, their focus on operational efficiency and cost controls contributes to a healthy profit margins. The nature of their products, which are essential for construction and infrastructure, provides a degree of stability even during economic downturns. I have to admit, fundamental wise, Atkore is a great company. When you look to our money journey checklist, revenue growth, they are been growing 14.5%. This is the average of the last 5 years. They have grown a lot in 2022 and 2023, like it was a COVID boom or a demand boom. Right now, revenues are going down, but it's due to cyclicality. In terms of margins, they are not great, but for an industrial company, it is very good. Gross margins around 30% and net margins around 12%. When we had this boom in the last few years, margins were higher. Right now, margins are going down because some problems, but we'll talk it next. But when you look to revenues, for example, we see 2022 and 2023 a boom, but 2024 revenues were down, 2023 as well, but right now we are going to the average trend, I would say, and the company is very profitable, even though they are in a 2-year slump if you look to the revenues, and it is expected revenues in 2025 to be down as well, around $2.8 billion, but it's look like the bottom, or at least analysts are expecting that, but that's not in bad cyclicality. It was a boom in 2021, 2022, but right now revenues will be recovering, at least it is what is expected. When you look to margin, very good. In terms of that, it is a low debt. They have 300 millions in cash and long-term debt of 765 million dollars, but they could pay this difference with only 1 year of free cash flow. So this is a company very profitable. When you look to the PE, for example, last year was a down year, and even that, it's just trading at the PE of under 6. It is expected for revenues and profitability to decline, so forward PE it's look like a 9, but it's going down. Profitability is going down, but it's look like a rock bottom. If revenues pick up, continue to expand, profits expanding as well, I'm thinking could be a really great opportunity. At least this is my thesis. look into returns, that's where it gets interesting. High returns on equity and on investor. For an industrial company, this is great. They have returns on invested capital above 20%. The 5-year average is 31%. So this is very good, and for a company like Atkore, I would love to see them investing their free cash flows in so they can have higher returns. A moat and competitive advantage, we already talked that they are pretty good brands, so they have intangible assets. It's a narrow moat, even though they are market leaders. That could be a wide moat, but they face plenty of competition. One of the reasons revenues are down, it's not because demand is lowering. For example, if you look to 2024, the revenues are down 9%, but volumes were up like 2 or 3%. So why is that happening? They sell plenty of conduit with a material called PVC, so there are plenty of pressure from countries like China that is having raw materials at really lower prices, and they are basically creating volatility in the market, sending that like a low cost material to the market. So it's taking pressure, it's making pressure on Atkore prices, so that's why the revenues are down and profitability down, and it's one of the risks of investing in this company. But they having free cash flow positive and doing a lot of returns to the shareholders. Look at this. This is my favorite part. Even though gross margins are going down, they are in the mean. I would say gross margin will be around 30% in 2020, which was bad years. It was around 28%. Right now it's 33% and growing. It's a trend that we like to see. Returns on investment. You should not focus on 2022 and 2021. That was a boom year. Demand was a lot. So of course we'll not have these returns in the future. But my favorite graph is this shares outstanding. They are buying back a lot of shares. Look at this. In 2022 they bought back 6.4% of the company. 2023 11%. 2024 during last year 6.5%, and in 2025 this calendar year is different, but they already bought 2% of their shares. So I would love to see them to buying back more shares. They have not been. This look like undervalued companies. So seeing management doing this, it's a sign that they have a really great management team, in my opinion. So I love seeing that, buying back shares at this valuation. It looks like the best thing, and with that the result is net income per share is growing. Of course 2022 and 2023 was a boom year. Profits were really high, but the trend is going up. I'm expecting 2025 2026 to net income per share to continue to grow. That's why I really like this company, and it makes a lot of sense for me. But is this really cheap? Is Atkore trading at a really good price? Let's do our discounted cash flow analysis. So since it's a US company, I would say there are some risks, but it is a very stable business, so it could be a safe in terms of risk, but I will assume a low risk. So for me, the discount rate for my base case has to be 12%. I could use a 9 or 10%, which would give us the intrinsic value, but I would like to have some margin of safety in my discount rate. So for my assumption, for my base case, in terms of margins, their net income margins has been around in the last 1, 2, 3, 7 years. It's been around 15%, 14.8. So I'm assuming a 14%. I know if there is plenty of pressure, margins could be under 10%, but if they continue to grow, they could have margin between 10 to 15%. In great years, above 20%, like we have seen in previous years. So I will try to be not much conservative, but I really believe they can have 14% margins. In terms of growth, since we are seeing a decline on margin for like 3 years, I'm expecting them to grow, but like GDP growth, I will assume 3 to 2% for the next 5 years and the 5th to the 10th year. In terms of PE, bear in mind this is a really great company, business leaders, a wide moat company in my opinion. Very stable business, even though they face a lot of pressure. So it's basically an above average company, I would say so. Market median average, it's trading, the S&P 500 is trading at the 20 PE ratio, above that actually. But for this company, since they have not have higher margins, it's not a very profitable business, even though they have really great fundamentals. I will assume a 16 PE, trying to have some margin of safety here. And with these assumptions, of course I have done a bull case in the bear case, and with these assumptions I came with a fair value. For me, I would like to buy $113.5. Right now the stock is trading under $60. It is a margin of safety of almost 50%, like we like to see. Bear in mind, this is my fair value, or a price I would like, or the price I would be interesting to buy, because there is some margin of safety in the discount rate. So seeing Atkore, a great company, trading at such a big discount, it gets me very interesting. Full disclosure, I do own this company, and that's the reason I've started a position. It is good position, but at this price I'm really interested to increase my position. So probably Atkore is what, if you look into the quality of their fundamentals and valuation, it's probably one of the best stocks I have in my watch list. That's why I'm doing this video for you guys, and why I'm getting very interested in this company. So, what's the verdict on Atkore stock? We have covered a lot. Atkore's rock solid business in electrical and infrastructure products, its competitive strengths like market leadership and brand power, and the massive 66% drop that's caught every value investor's eye. The fundamentals show resilience, but we have also seen margin pressures and a taut industry backdrop. After digging into the valuation, it's clear this could be a long-term winner if you are patient, but it's not without risks. My key takeaway: Atkore is a classic value play that's testing our discipline. Let me know your thoughts in the comments. Do you see this as a buy? Hit subscribe, and I'll see you in the next one. This video is for informational purpose only and should not be considered financial advice. Always conduct your own research and consult with a qualified financial advice before making any investment decision.